Welcome back to the channel, or welcome to the channel if it's your very first time here. My name is Troy, and on this channel, I document our journey towards an early retirement through dividend investing. June was packed with daily buys, dividend payouts, and some exciting progress across our portfolios. And in today's video, I'm breaking it all down. We'll look at what we invested, what we bought, who paid us, and how much our snowball has grown. Plus, since June wraps up quarter two, we'll take a peek at the first half of 2025. So let's kick things off with the foundation of it all: how much cash we deployed in June, how consistent we've stayed, and what kind of momentum we're building heading into the second half of the year. In June, we deployed a total of $3,149.38, staying true to our goal of investing daily. We hit all 20 out of 20 market days, keeping our daily investing streak alive. That brings our year-to-date total to $20,094.48, which officially crosses the $20,000 milestone for 2025. Our monthly average now sits at $3,349.08, and we're on pace to invest around $40,188.96 by year end. We're still sitting at a 99% consistency rate. The only day missed all year was way back on February 5th, meaning we're now riding a 99-day investing streak. With all of that consistent investing behind us, let's see what kind of impact it's had on our total portfolio value as we close out the first half of the year. We started 2025 with $341,885.84. After a dip in April, we ended May at $347,628.92. Fast forward to the end of June, we closed out at $363,777.48, setting a new all-time high for our combined portfolio. It's been a strong rebound from earlier this year, and it goes to show how staying the course during dips really pays off. But this growth doesn't just happen. It's fueled by consistent investing. So let's talk about where we actually put our money to work in June. What you're seeing on screen is the full breakdown of all of our buys, including the tickers, share counts, dollars invested, and how much forward income those buys added. In total, we added 25.4628 shares, deployed $3,149.38, and boosted our projected annual dividend income by $32.43. Those are solid long-term holdings. Most pay dividends, and all are chosen to help us grow our portfolio steadily over time. This is the power of consistency. One day, one share, $1 at a time. Speaking of forward income, let's see what all these buys have done to our dividend projections going forward. This chart tracks our PADI projections, showing how much we're set to earn annually, monthly, and daily just from dividends. Back in January, we were projected to earn $2,673.57 a year. That grew to $2,942.93 by May, and now we're sitting at $2,969.45 to close out June, or $247.45 a month and $8.14 a day in passive income. While the dividend income is growing, my main focus this year remains on making the money work as hard as possible, aiming for growth without sacrificing potential. The plan is to keep these solid growth holdings for now, and when the time comes to shift more towards income to support early retirement, we'll adjust accordingly. If the current mix keeps performing well, providing both growth and enough income, that's even better. So while the income slowly rises, we're also building a strong foundation for the future. Now that we know how much income we're set to earn, let's talk about the real dividends that actually hit our accounts in June. The money we received no matter what the market did. June was a super active month for dividends. We had 13 payments across all accounts, plus 5 interest deposits from idle cash. That's 18 total payments in just 1 month. A few of these dividends landed in the ACI portfolio, so I won't be breaking those down here. If you want the full breakdown on those, I'll link the latest Anyone Can Invest episode above me. For everything else, let's go rapid fire and walk through each payment account by account. First up, in the Retire Early taxable account, Visa paid us $29.86. That brings our total from Visa to $131.66, which now makes up 3.27% of all of the dividends received in this account. Also in that account, Microsoft paid us $31.29, pushing our total Microsoft dividends to $162.72, or 4.04% of the total income received there. Over in my Roth IRA, SPYG paid $14.57. That brings the total to $163.85, or 5.62% of the Roth income. QQQM paid twice this month, $4.43 in my 401k and $14.66 in my Roth IRA, bringing our totals to $21.87 in the 401k and $139.84 in the Roth. Also in the Roth, VNQ sent us a strong payment of $69.85, boosting our total to $608.40, or 20.85% of all income received in that account. SCHD chipped in as well with $71.95 in my Roth, pushing that total up to $581.97, or 19.95% of that account's lifetime income. Then we jumped over to the Weiss Roth IRA, where SCHD paid her a solid $157.63. That puts her total from SCHD at $1,060.62, which makes up a whopping 69.03% of her Roth income. But to be fair, she only holds 2 positions in that account, so that percentage makes sense. Lastly, in the wife's 401k, VMCIX, a mutual fund, paid out $163.84. That pushes her total from that one holding to $1,475.23, or 67.76% of the dividends received in that account. That was a lot to go through, so sorry about that. But when it takes that long to go over all the times we got paid in a month, that's a good problem to have, and I'm not sorry about that. Now let's zoom out and take a look at how all this stacks up at the monthly level, and how this June compares to the past months and last year. June 2025 was a banner month for dividend income, bringing in a total of $617.96, almost doubling last year's June total of $314.41. That's a massive 96.5% year-over-year increase. Looking at the full second quarter, we earned $837.59 in 2025 compared to $632.63 in Q2 of 2024. A solid 32.4% jump in just 1 year. Year to date through the end of June, our total dividend income now sits at $1,805.46, steadily climbing as our snowball gains momentum. These numbers show that staying consistent and focused on quality pays off, with income growing faster than the market average. Now that we've seen how June stacked up and how the year is shaping up so far, let's take a step back and zoom out to see the full career dividend picture. Every dollar we've earned since day one and how those payments have added up across all of our accounts. At the top, you'll see accounts like the ACI portfolio, Tia's 401k, my 401k, our IRAs, and more, each contributing to this dividend journey. Each row breaks down how much each account has paid us in total dividends, what percentage that represents of our lifetime dividend income, and how many shares we've quietly stacked through drip along the way. That last column, one of my favorites. Proof that by holding strong companies and reinvesting consistently, we've been building more shares for free without even noticing. And that grand total at the bottom, that's the real story. Real, hard-earned money that grows just by being patient and letting time do its magic. It's seriously motivating to see every account playing its part in this bigger picture. This is the dividend snowball rolling faster than ever. Speaking of snowballs, up next, we're diving into the snowball trackers. These charts show exactly how long it took to hit key dividend milestones, starting at $1,000 and then $2,500. And you'll see each milestone coming faster than the last. That's the power of compounding and steady investing in action. This month, we hit a new milestone, $12,000 in total dividends received. It took just 91 days to reach this milestone, starting from March 31st to June 30th of 2025. That pushes our average time between each $1,000 milestone down to 242.9 days, an improvement from the previous average of 256.7 days. While not every milestone comes faster than the last, the goal is to keep the overall average shrinking, and that's exactly what we're seeing. As for the $2,500 milestones, no new ones this month. We're closing in on that $12,500 mark, so it's only a matter of time. This steady progress highlights the power of consistency, compounding, and staying disciplined. The snowball is rolling faster than ever. Now that we've seen the momentum in our dividend income, let's shift gears and take a closer look at how the portfolio is actually built. This next slide breaks down our capital allocation, not by market value, but by the dollars we've actually invested, helping us stay intentional and focused on what we can control. On the left side of the screen, you'll see a pivot table combining all holdings from Tia's accounts and mine, giving us one clear, consolidated view. Instead of drowning in ticker symbols, I group similar holdings together. For example, any S&P 500 fund is simply labeled S&P 500. Same with SCHD, mid-cap ETFs, and others. This keeps things clean and easy to understand. Each row shows the name of the group, how much we've invested there, and what percentage of our total portfolio that represents. At the bottom, you'll spot the grand total invested, and that's the number I really focus on when thinking about diversification, not the market value. Over on the right, we have a pie chart showing the same data visually. For those of you who are visual learners, this really helps make sense of the allocation. Right now, here's how it breaks down. About 35% in the S&P 500 or funds tracking it, 15% in mid-cap ETFs, 8% in SCHD, 7% in leveraged growth plays like UPRO and TQQQ, 6% in high conviction dividend growers like Apple, Costco, Microsoft, and Visa, and the rest spread across smaller positions. Remember, this is all based on invested capital, not market value. Prices change every day, but letting that shake up our strategy, that's like trying to steer a ship by focusing on every single wave. Instead, we control how much money we put into each piece of the portfolio, staying intentional, balanced, and avoiding the trap of chasing performance. Now that we've seen where the money is, the big question is, how is it performing? Next up, we'll compare our portfolios against the major market indexes, looking at both short and long-term results to see if our strategy is really delivering. Let's dive in. In June, most of our accounts gained solid ground, with my Roth and HSA leading the pack. The S&P 500 and NASDAQ had strong months too, so we're mostly in line or slightly ahead. Year to date, some portfolios are up modestly, others a bit behind, while the benchmarks continue to climb higher. Over the past year, we're trailing the market just a bit, and I won't sugarcoat it, that's frustrating. But that's why I track this closely, to make sure our strategy stays on track for long-term growth and market outperformance. It's a reminder to stay patient, disciplined, and focus on the bigger picture. And with that being said, let's go ahead and take a quick peek at what dividends are headed our way in July. Looking ahead, July is shaping up to be another solid month for dividends. We've got 11 dividend payments scheduled to hit our accounts, not counting any interest payments from idle cash. Those are always a nice bonus too. Each payment is another step in building that passive income snowball, so stay tuned for the full breakdown next month. June was a fantastic month for our portfolio and overall a great way to close out the first half of 2025. Now I want to hear from you. How much passive income did you collect in June, and how did your portfolio fare for the first half of 2025? Drop a comment and let me know down below. And if you haven't seen it yet, check out the latest video from my Anyone Can Invest series, where I'm building a brand new dividend portfolio from $0 from scratch that you can see right here. But until next time, see you.